Americans in their 30s have racked up a huge amount of debt since the pandemic, and that debt is still growing.
$16.15 trillion. That is how much debt American households owed by the second quarter of 2022.
Many folks across the United States are saying enough is enough and going on what's called a bill strike. They're saying no to paying debts like mortgages, student loans, and credit cards because either they can't afford them or they think they're just not fair. And they're not alone in this fight. Why are they doing this? Well, it's simple. The cost of living keeps going up, but our paychecks? Not so much. When our wallets get squeezed tighter and tighter, it's no wonder people are getting fed up. But here's the thing. When millions of us say no to paying bills, it sends shockwaves through the whole economy. Banks start to worry, and even the government takes notice because, let's face it, when the system feels the strain, we all feel it. The ongoing cost of living crisis is pushing millions of Americans to their financial breaking point. According to a recent study by the Money and Pension Service, more than 16 million people have missed payments on their household bills this year alone. That's a whopping 5% of households falling behind on at least one payment in 2023. And it's not just a one-time thing. 2 million folks, equal to the entire population of Houston, Texas, have missed a payment for the very first time this year. If that's not a clear sign that things are getting worse for many families out there, I don't know what is. So what's the reason behind all this? Why are so many of us struggling to keep up? Well, rising inflation is a big culprit. That's when the cost of things we buy keeps going up, but our paychecks aren't growing fast enough to keep pace. Just take a look at the latest inflation report. In December 2023, prices had increased by 3.4% compared to December 2022. The annual inflation rate in the United States has increased from 3.2% in 2011 to 8.3% in 2022. This means that the purchasing power of the US dollar has weakened in recent years. But it's not just the rising prices that are hitting us hard. Our paychecks aren't stretching as far either. The Bureau of Labor Statistics tells us that wages and salaries increased by 4.3% for the 12-month period ending in December 2023 and increased 5.1% for the 12-month period ending in December 2022. That sounds great, right? Well, not when you factor in inflation. When you take that into account, our real earnings actually dropped to 0.9% in 2023, and that's not even counting taxes. So even though we're working hard, it's getting tougher to make ends meet. And let's not forget about those federal relief programs that helped us get through the tough times during the pandemic. Remember those extra unemployment benefits? They ended in September 2023. And hold on, because it only gets worse. The eviction moratorium, which stopped landlords from kicking out tenants who couldn't pay their rent due to the pandemic, also ended in October 2023. These programs were like safety nets, helping people stay afloat during rough times, but without them, many folks are struggling. According to Bankrate, a staggering 56 million people have been in debt for at least a year. That's a lot of people falling behind on things like car loans, credit cards, rent, and mortgage payments. This just goes to show how many people are struggling to keep up with their expenses. Nearly half of credit card users carry a balance from month to month, adding to their financial stress. It's tough out there, and for many, it feels like a constant battle just to keep their heads above water. The economic landscape is starting to look like a modern-day version of the Hunger Games, where everyone's fighting tooth and nail just to survive. And with interest rates on the rise, things could get even tougher. What happens if more and more Americans can't pay their bills? It's a scary thought, but one we need to consider. As the bill strike phenomenon grows, the gap between the rich and the rest of us could widen even further. Some folks might climb into the top 5% and enjoy financial success. But for the majority of us, it could mean even more hardship. And it's not just credit card debt that's weighing us down. Student loans are another big issue. Outstanding student loan debt in the U.S. now exceeds $1.7 trillion, burdening Americans more than credit card or auto loan debt. The average loan balance at graduation has tripled since the 1990s to $30,000 from $10,000. Additionally, some 7% of student loan borrowers are now more than 100 $100,000 in debt. Millennials and Gen Z are really feeling the heat. Last year, over a third of millennials and Gen Zers had at least one account with a missed payment. And among millennials, default rates are highest for credit cards, auto payments, personal loans, and other debts. But it's not just the younger generations feeling the squeeze. Gen Xers, those in their 40s and 50s, are facing their own challenges. Mortgage payments are a big concern, with over 1% of Gen Xers falling behind. Dealing with debt can be tough, especially for younger folks. Many of us just don't have enough money coming in to cover all our bills. And with nearly 30% of Americans already falling behind on debt payments, things are getting even trickier. This is where strategic debt management comes into play. What's that, you ask? It's all about making smart choices when it comes to money. Sure, joining a bill strike might seem like a way to stick it to the system, but it's important to think about the consequences. With credit card interest rates at an all-time high, missing payments can really hurt. Your credit score could take a nosedive, and that can make it harder to borrow money in the future, whether it's for a loan, a mortgage, or even just a credit card. Late payments can really pack a punch. Just one late payment could drop your credit score by a whopping 180 points. To put that into perspective, imagine having a solid 750 credit score and then seeing it plummet into the 500s with just one slip-up. It's a big deal, and it's something to take seriously. But don't worry, there are ways to lighten the load. Some credit cards offer something called a zero-balance transfer, which can help you move your debt to a card with lower or no interest for a limited time. It's like hitting the pause button on your interest payments, giving you some breathing room to catch up. But it's not just about us. Missing payments doesn't just hurt us individually. It can also have a big impact on the economy as a whole. When people can't pay their bills, it can damage their credit scores, making it harder for them to borrow money in the future. And if they can't borrow money, they can't spend it, which means less money flowing through the economy. That's not all. Businesses that provide goods and services, like utilities or banks, rely on people paying their bills on time. When payments are missed, it can hurt their bottom line, leading to job cuts, bankruptcies, or even closures. And here's the kicker. All of this can ultimately slow down economic growth even more. So what steps could be taken to help with the financial debt? If you're struggling to pay your bills, there are steps you can take to avoid the negative consequences and get back on track. First things first, reach out to the companies you owe money to. They have a responsibility to treat you fairly and offer options that fit your situation. They might be able to set up a payment plan, offer a hardship program, or give you a break with forbearance or deferment. The key is to get in touch with them as soon as possible and explain your situation. Don't be afraid to ask for help when you need it. If you're feeling overwhelmed, there are professional and charitable organizations out there that can help. Nonprofit credit counseling agencies, for example, can assist you in creating a budget, negotiating with your creditors, and even setting up a debt management plan. And don't forget about government or community programs that offer specific assistance, like energy aid, food stamps, or rental help. Reach out to them for support and guidance. It's also important to speak up for policy changes that address the underlying issues causing missed payments. Things like inflation, stagnant wages, and gaps in social safety nets need to be addressed. There are proposals out there, like raising the minimum wage, expanding tax credits for low-income earners, or even implementing a universal basic income. These changes aim to boost the income and security of everyday Americans, reducing the need to rely on debt. As more people join the bill strike movement, it's crucial to navigate these challenging financial waters with care. This is a time for resilience and strategic planning. By staying informed, seeking help when needed, and advocating for change, we can build a more stable financial future for ourselves and our communities. Remember, you're not alone in this journey. Together, we can overcome financial challenges and build a brighter tomorrow. If you want to learn more about the dangerous financial situations we're facing these days, be sure to check out this video where we go into the details of the car market crash of 2023 and its consequences.